Today, we will observe A+ masterclass level setups, talk about how to find specific trade entries. Of course, we will keep using our best indicator with our best momentum-based scalping strategy. There are so many subjects to discuss today. If you are ready, shall we begin? Let's continue our discussion about Bitcoin and this regular setup we've been trading for quite a long time now. As you already know, Bitcoin has been looking quite weak and continues to make strong break downwards to the downside. So it makes more sense to focus on short-based trades rather than the long trades these days. So this large imbalance area after the strong break immediately caught my attention. I know many of you also noticed this specific area right away. And at the bottom, we had this expected previous day's low serving as a target. So basically, coins are weak, bearish breaks are strong, imbalances are large and significant, and the targets are clear. I think that tells you the whole story that you really need to know. As you know, the core of our strategy uses this multi-imbalance indicator, which helps us to identify better trade areas more clearly. And because of the indicator, which I believe is some of the best trading indicators out there, this multi-imbalance location was highlighted from the 30-minute level up to the 2 hours area. And our expectation was quite simple, a move down until that single target was taken out. However, on the other hand, if this multi-imbalance area had been broken strongly upwards, we could have expected a short, strong rally to the upside for a certain point. But do not forget this overall look remains quite bearish these days. Now, I moved down to the lower time frames to examine the internal structure more closely. This was the upper area of the multi-imbalance zone from the higher time frame we just observed previously. Notice that there was a major structure breakdown and this small bullish imbalance failed very badly. So these are small clues and early signs of a possible reversal on the lower time frames that we really need to pay attention to. Then the structure was followed by a bearish break and huge imbalance, which gave you a great trading opportunity with the setups around probably 2 hours. So in my opinion, this was a good and okay setup. I would not call it a A++, but it was definitely above an A grade setup. What I can tell you is that this is a fractal trade. If you trade price action, smart money, or any other concept or strategy, fractal trades are usually better, safer, and much more powerful. Now you may be thinking, what is a fractal trade? I want you to imagine that you use the indicator, the great free indicator on TradingView, and identify this multi-imbalance zone. On the higher time frames, the structure keeps breaking downwards with a bearish market in play, making strong higher time frame breaks and also creating these large higher time frame imbalances. Now, this all happened in the high time frames. Then you open the lower time frames in these entry areas, and the exact same thing happens on the lower time frames. It looked like a small snapshot of higher time frames. You see strong breaks followed by lower time frame imbalances. So everything is pointing in the same direction and moving towards a universal targets. That, my friend, is what we call fractals. In simpler terms, it means the same price action patterns appear on both the higher and the lower time frames at the same time. Okay people, this was a nice practical video. Take care for now, see you in the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free TradingView indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.